Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, January 19th, 2016. Hope everyone had a lovely weekend and you're in fine form this week for this week's classes. And let's give a shout out to our dear friends in archive land as well. Hope you all are in a fine form too. Now, also regarding the music, one of the reasons that we have been with Omnovia for many years, Omnovia is very expensive, but we do like their product, their functionality, and they do have some, different features that such as GoToMeeting and Webinar do not have. They're more plain Jane. And Gary and I like the extras, so we have stayed with Omnovia all these years, even though they are very expensive. And we always enjoy the Smooth Jazz channel. So we had some trouble with the Smooth Jazz channel the other day, and I reported it. And then they found a new Smooth Jazz channel for us. And then we received a note from Omnovia that they had decided to streamline things and that they had removed the radio tab from the audio player. And I was like, no, that's not going to work. So I submitted an email and I said, nope, this will not work for us. One of the main reasons that we have remained a loyal customer all these years is for your different features. Otherwise, we could be with GoToMeeting or GoToWebinar. So I highly recommend you restore our audio tab. And so I received a response, and he said they would gladly restore the audio tab the radio tab to the audio player. And so by me speaking up and voicing my opinion, they have restored the music. And so we're glad to say that we were able to, and they also restored the Smooth Jazz channel. We now have Smooth Jazz Florida. Seems like it's going to be a nice channel for us. So, just a little inside story on that. And John Younghusband, since you joined us late, that is the new Canadian dollar. They've turned it into the Canadian peso because due to the low oil prices. Gary wanted to make sure that you were up to speed on what was going on, the new currency. All right? So anyway, I hope everybody's ready to roll. We'll jump right on in. Yep, James. Glad to have you with us, James. I always appreciate your feedback. All right, I'll go ahead and turn it over to Gary and we'll get going. All right, so please sit back, relax, and enjoy. And here's Gary. Thank you so much.
Good morning, everyone. As you know, today is Tuesday, Gary's Market Forecaster, GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the new MPAP3 software. Also adhere to very strict money management rules, which include never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give me a minute as I open up the charts. Okay, can everyone see the charts? Everyone see the big red cursor? Yes, okay, thank you, James. We'll pick up with the euro. We've been grinding, and it's continuing to grind. Last week we talked about, John, this grinding toward the upside, and we were expecting it to make a run towards 110.86. Well, it slowly but surely grinded up and came just shy. It did make a new high above 109.67, went to a high of 109.83, but did not reach 110.86, and since then it's starting to taper back off. We'll notice a little update on the charting that we see what's probably unfolding in this wave 4 correction is a triangle. So we have A, then a 3-wave move down for B, a 3-wave move up for C. I'm going to expect a little 3-wave move down for D and another little move up for E to complete this wave 4. Now what's that going to do for our overall expecting price to stay below 110.86? It's obviously going to still honor that, but instead of grinding up into 110 and above, if this is a triangle, then as we know triangle formations, and this is a contracting triangle, so my A wave is the longest, my B wave going down from A to B, then now my C wave is shorter than A, and now when we're working on the D wave down, it should be shorter than B. So you'll notice I just put this blue line across at an angle to represent that when this D wave is done, it should obviously complete above our swing point low here. And that swing point low is at 107.09. So basically the 07 range is still off limits. Last week we talked about, as we were grinding, we said we should not go on and break new lows below 107, that we were likely to grind back towards 110 first. Well, now if this is truly my A, B, C, working on D down and then E up in this little triangle, then of course our downside pressure should stay above this 107 area and make wave D shorter than wave B, and then once we bounce and go up for E, we should then see a lower high, as we should not expect it to go on and break the top of C. And again, that top of C, as I put the cursor on here for my computer to pick up my high and low, is that 109.83. So once D is done, we move up in E. E should fall shy of 109.83, and ultimately we end up in this little triangle for wave 4. Then we start moving strongly back to the downside. So what does that mean in time-wise? Well, I was expecting once wave 4 was over, we should see stair-stepping going down, 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 down. Well, this triangle means it's going to take probably a few more days for this thing to grind down and then back up to then top in reverse and start that downtrend continuation. The other possibility still remains that what if this is just the A wave over here, this is the B wave, and we're working on a C wave higher? Well, that's still possible, but it's becoming less and less likely until we start to see some strong upside movement, which would include a break above 110.86. So what I want you to do in terms of, well, Gary, which one is it? Is it the A, the B, and the C going higher? Or is it the 1, 2, 3, 4 ultimately going lower? Well, the key component will remain the 110.86. As long as we stay below 110.86 and honor that level, we're going to expect the biases we're in at 3, 4, ultimately finish this wave 4 correction before then moving down, as we should expect it to stair step, stair step, stair step, and eventually take out this 104.61 level. If it is the A, B, C, D, then of course we're going to see it do the reverse of that and break 110.86, and that would set the tone for this moving higher in this C wave. So the critical, absolute, make or break, do not cross, don't even think about it level is 110.86, 1.1086. So please put a note on your chart and a red line across that 110.86 that is not allowed for price to break up that direction. Well, if this is this formation of a triangle, then again, as I just explained, then we should not see, once D is done going back up in E, we should not see this 109.83 reached. It should come toward the trend line, find it, find resistance, and then start moving down, ultimately breaking below 107. As far as this wedge is confirmed, we should not see price break below 107 until after we bounce, go back up here for E, then top in reverse and head down. So the next critical level to watch is basically the 107. What does that mean, Gary? Well, if we go down and break 107, this can't be this wedge. Everybody good so far? It cannot be the wedge if we go on and break and head lower below 107, because it's not allowed to do that in a wedge formation. So it must be it's back to the way 4 is done over here, and we're in the process of a 1-2-1-2 scenario, moving lower in 3 of 3. But again, this 1-2-1-2 scenario is not really acting like a 1-2-1-2. It's not pushing strongly to the downside. So that's why I kept saying I thought we still need further upside to go. And well, Gary, is it possible that could be my 1, 2, 3 and a combination 4 here, and it just was truncated? Again, it's not really acting that way. So that's why I came up with the wedge formation. That could explain why it's drifting sideways in these constant three-way moves. We went up in an ABC for A, an ABC or WXY for B, another ABC for C. This could be our ABC for D and an ABC for E. So wedges usually will complete in three-wave moves. Fair enough? So Gary, how low should we go? We could head down another, about another 100 pips, but we can't break 107. So I'm going to put this little trend line about this angle, and that's where I'm representing where we should see wave D come down. We should see a new low below here, which is sitting at 108.03. So we would expect probably about another 70 plus pip move lower in that wave. D should complete below this low here, but cannot go and break the 107 low there. So if this is ABCC and we're working on ABCD, we should see a new low below here, and we should see price come down toward this blue line and bounce off to head back up. Nothing changes long term, even if it's the ABC, going higher. Nothing changes long term because we expect the euro will decline and move much, much lower in the months and months and months and months and months to come. Everybody good so far? So Al, you got that? We got an A, B, C. Appears we're working on a D and an E. And if this does play out in this little wedge formation, this could last a few more days before we grind down in D and grind up in E, top and roll for 4 going down in 5, and look out below as we then start stair-stepping. Well, again, if it ends up being A, B, C, then we need to see strong upside movement, and we need to see it confirmed by breaking above 110.86. And that would open the door to a substantially higher move, more than likely a run back towards 117. So that would give us about a 700 pip tally back toward the upside if this is the ABC. But price must obviously break above 110.86 for us to take this ABC scenario seriously. And we always know whether it's ABC going higher or my 1, 2, 3, 4 moving lower in 5, we're going to follow that line of progression. So let's go to the software and check it out. Dailies moved back toward overbought as we had expected it would. Didn't quite get all the way, but as before we had it turned down and it turned back up. We could see similar behavior. We could see it stay down for a couple of days and we moved down toward that D wave down. Then we look for it to bounce, in a good area on the Ichimoku cloud is we could see this grind toward the bottom of the cloud. Here's my 107 down here. So we should not see price break much below 107 as we can't break a new low. So we could see price grind its way down here toward the bottom of the cloud, maybe a little bit lower. But again, we need to have a sloping upward line once that D is finished to bounce off of to go up in E. Then we need to see this upwards channel from A to C hold for our E wave, which means we should not see price grind back into and make a new high. So we could do the wedge formation, and that's what I believe is unfolding based on what price has done. But again, regardless, we're still going to follow the line of progression. And why would we expect we should grind a little lower? The daily starting to turn back down. Right? Not the trend momentum yet, but the PAI is starting to make a little turn. Money flow is flattening, blue is starting to flatten out, red's turning down. So that's why we're expecting to see a little downside movement. The 4 hours you would expect since then has been moving from overbought toward oversold, overbought toward oversold, and it too is still trend momentum and PAI down at the moment. The weekly should hold serve, as we mentioned last week, and basically that's what it's doing now. My daily is starting to turn and hook out a little bit, but it's not where it's the trend momentum and PAI pushing lower on the daily. It's simply the PAI turning down, and that's holding the weekly just kind of in check, where yes, it's separated. Yes, it looks like it wants to engage, but it's just hanging tough while we get this continuation move. The bias and the way I paint the Picasso is still the same. In order for us to go zooming to the downside and breaking 104.61, we're going to require help from the weekly. All right, excuse me. Hopefully the mute button worked on that. That was quite a sneeze. So this weekly should again just kind of hold serve, sit here, kind of do basically not much of anything, while the daily depressurizes with the PAI. Then it bounces and turns back up for the E wave. Then my daily tops and rolls not only the PAI, but the trend momentum as well. And once we finally have the trend momentum and the PAI headed down, that's when I believe this wave 4 will be over, and we'll look for price to move sharply to the downside in a stair-stepping affair. Now, what if this is wrong and it ends up being that A, the B, and the C much higher? Well, the daily is going to need to continue to slingshot higher and higher and higher and higher and higher. But more importantly, prices must go up and break that 110.86. And what would happen to the weekly in that case is this weekly would disengage and would allow for the PAI, money flow start to turn up, blue turns up, and I get red, blue, green, all of my PAI moving up, and my trend momentum continues to go higher, 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 higher into overbought territory. If I don't see 110.86 breached, then I'm not seriously taking into account that A, B, C. It's possible, but it's lower probability. That's why it's the alt count. Higher probability is part of my 1, 2, 3, 4 scenario. The question still remains right now, Al, is how is that wave 4 truly unfolding? Is it going to end up in this wedge? Or is it already finished and it's just sluggish coming down with the 1, 2, 1, 2, and we're going to see very strong movement to the downside, aka a break below 107. So we're still looking for the important levels of 107 to be breached and or 110.86 to be breached. The bias is, like last time, we thought the 107 would not be breached until we moved higher. Well, I still believe that. We're going to move lower first, then back up. So we'll go down and produce this D wave, then back up in the E wave. But at no point should we cross 110.86. And then once that is over, we would expect 107 to be taken out. Once that's taken out, we can start to look for much further downside. So please put those two levels if you joined us late. I want you to put 110.86, 1.1086 with a big red line across it, saying if you want to do that, you can put price must stay below, because at no point should we see price break that. If price proves its intentions and does break above it, Then we're going with the primary now being the current alt, turning to the primary of an A, B, up in a C. Otherwise, the primary wave count says no, this is part of a 1, 2, 3, 4. And depending on the type of 4 correction, we ultimately going to top and roll and head lower. And when we finally take out 107, that should set the tone for that wave 4 is done. Whether it comes down and busts the wedge, meaning wave 4 is already done over here in a 1, 2, 1, 2, or it does this, what we expect, C, D, and up in E, and then we end up breaking below it, then that sets the tone that the wave 4 is done. So repeating. Let me mute that for a second. Sorry about that. The markets are open. Ding, ding, ding. So any questions? Wave 4 is over when we break below 107 and head down. Wave A, B, C is underway, and wave 4 is no longer on the table should we break above 110.86. Because we can't have a combination correction that would allow for this 110.86 to be breached because of our wave 1 blue, 2 blue, 3 blue, up in 4 blue should not break above wave 1. So it still could potentially be a different type of correction, but it can't be an impulsive 1, 2, 3, 4. Everybody good so far? So 110.86 is the top, 107 is the bottom. We've been range bound between there for weeks now, and we expect this may even continue several more days. But once we break one way or the other, it sets the tone wave 4 is done if we break below 107. And if not, and we go up and break 110, then we're into this A, B, C higher. So in closing, my bias is we're going to start to grind sideways to lower. Again, limited in scope. I'm not expecting it to go busting below 107, but we should make a run towards that 108 figure. We should at least break this low here. So we should head down around 108 and a little bit below so that we can make a wedge formation for D, then bounce and go back up for our E wave, which again should not then break this high, which is our 109.83, and we should see a higher low and then a lower high. Everybody crystal clear? Downside price should make a higher low than the wave count here, bottom, meaning 107 and above, and then once that's done and we start moving up, we should make a lower high. That's part of a wedge. We get highs, we get a higher low, we get a lower high, we get a higher low, and we get a lower high. So what's in store? Should drift sideways to lower to another higher low, and then bounce to a lower high, complete end, and then start to stair step down. And make sure you put a 107 down here at this swing point low. I think it was 107.09 to be exact, but that's okay. Just round it off. 107 is fine. We see a break below 107, then my wedge is busted, and we should be wave 4 is continuing. If not, and we continue at the wedge, then wave 4 is still unfolding. And for whatever reason, if it breaks 110.86, then we're going with the A, B, C. And back to the software. Again, the weekly is ultimately going to start turning and hooking over when this correction is over. And if it's not, and this ends up being that A, B, C, then we're going to see the weekly move all the way into overbought territory. So James, you got what you're looking for. What am I, Picasso? What should the software look like? If it is, excuse me, A, B, C, then we should see this move all the way into overbought, and this turn and go back up, money flow go up, blue go up, red go up, and they march day after day, week after week, higher and higher, and ultimately end up with a trend momentum and a PAI in overbought territory, right? If I see this, where it keeps grinding and going up, and we break that 110.86, then yes, the prognosis should be to chew through the cloud on the weekly, make a run toward the top of the cloud and maybe even a little bit above as it makes a run back toward that 117. But first things first, must break 110.86. We're talking 200 pips to the upside. Otherwise, we should see it break no lower than that 107.09 because we should see a higher low than a lower high to finish the wedge formation, and then down we go from there. But eventually, regardless, how we're going to go down, down, down is going to be the weekly taking over back to the downside, and that's what we should look for. So as expected, this weekly, as it looked like it wanted to engage early last week, I said look for it to start to flatten out and turn a little bit as we expect this to grind back up. Well, that happened. Now we're expecting a little more downside followed by a little more upside, wedge formation, before we end this move. But that shouldn't take long. I mean, a few more days, yes, based on that wedge formation. But it should not take forever. It's not a long-term correction. It should matter of a few days before then a top and reversal. So we should know, based on price action, something very soon what ultimately will be taking over in the coming days. But the bias is we should drift sideways to lower, then back up in a D down, E up, top and reversal. And when that daily does officially top and reverse, including not only the PAI turning down, but the trend momentum turning down, then we would expect this to move much, much lower as we start to stair step, breaking out 107, working our way down to 104.61 and below. So any questions thus far on the euro before we move on? So here's the wedge formation. Gary, does that mean this is part of an A down? We could go back up in a B. We can even come toward the top of the line. We just can't break above this C high, which again is at 109.83. That's off limits. So again, it should look like this: an A, a B, a C. This could be my A down. We get a little B up and then a C down. So again, we should not break the wedge. We should hold the wedge formation and end up heading lower, breaking this low here, but not breaking that low. D, E. Okay, the pound. The pound's been continuing lower on Q. It's headed to our next target of 140.160. So I expect another 29 pip drop, make a run toward this target. Just like last week, we told you the next target was at 42.50. Once we took our initial 43 target up here, what did we say it should do? It should move down toward our 42.50. Now remember where we picked that 42.50 area up? It was from a previous swing point low, battle zone. Well, we're taking that battle zone out, and the next one up is around 41.60. And we're not too far away from that. So as we continue to move lower and lower, eventually I rechange the labeling slightly. It's part of the subdividing, but it looks like we're working on our wave 3 blue down with a 1 blue, 2 blue, subdividing 1, 2, 1, 2, 1, 2, 3, 4, 5, 3, 4, working on our wave 5 down in magenta, completing wave 3 blue. Then we're going to get a wave 4 blue up and another push lower. So nothing's really changed in the 1, 2, 1, 2 scenario. I'm just extending this wave count further because that's what we're expecting the pound to do. The pound again is expected to go much lower in the coming months, but we're going to need another correction. We did get a slight correction here, but nowhere near to where we thought it might go. We just said it should stay below this level, and it stayed below, and it stayed much below. And now, once we finish this wave 3 blue over here, we are going to see a much larger, more time-consuming correction, but we'll start to watch the swing point low over here. And that swing point low for wave 1 blue is down at 48.92. 48.92. So let me just do that real quick and add another red line. Okay. So everyone clear on this? James, what's happening? It appears we're in a 1 blue, 2 blue moving lower, and 3 blue. Wave 3 blue is subdivided in a 1, 2, 1, 2, 3, 4, 5 green, 3, 4 magenta, working on its way 5 magenta. So that's just part of subdividing, subdividing, subdividing. And we're headed down towards 2 targets. My first target is 41.60. My second target is 39.96. 39.95, round it off. That's good. So Gary, does that mean wave 3 blue can end here and start to go up, or it could come down in between and go up, or it can come down a second target? Yes, I expect wave 3 blue, which we're working on right there, should come down at least the 41.60 range, which we're getting closer as we speak. Or we could go to a second target down here. Well, Gary, what's the difference? Just like I gave you target 1 and 2 before, we're going to eventually take both of these out. The question is, if it ends 3 here and goes up in 4, then comes back down, we're still going to take this target out. We're still going to go much lower in the weeks and months to come, but we need to look for battle zones to eventually hold and look for this to bounce to go up towards a wave 4 correction. And I will go ahead and add that over here. My wave 3 blue is unfolding, as we just mentioned, moving lower and lower. And now we continue to expect this to continue to grind lower. Why? The daily trend momentum PAI, the weekly trend momentum PAI, the monthly, all are still pointing down. Yes, they're oversold, but they're still pointing down. So lo and behold, we should see this baby grind a few more pips down to this first target. Once I get near there, I'm going to take some profits off if I'm on the short side, because we are expecting at some point a bounce and another retracement. All right? So at whatever point we finish 1, let me get the big red one back on board. We finish 1, we finish 2, we're subdividing, stair-stepping lower in 3. And again, I expect to see him make a run toward this battle zone as we get closer and closer, because that's what battle zones do. They just suck price down toward them. So we're seeing this move lower, and then we're going to expect at some point this wave 3 will end, and we're going to start to work on a wave 4 higher. So 1 second while I do that. We're going to work on a wave 4 higher over here. And at some point, we should see that correction move higher, yes, but is not allowed to go all the way up here to this level of 48.92. 48.92. So I'm expecting it to stay below the 44 at the moment till this wave 3 is done. And William Bruce on cue. Where's it going? Everybody, look. Wow. Going right at it, like just being sucked down. Could it go lower? Yeah, it can come all the way down here before that wave 3 is done. But we're expecting at some point, so I would be peeling off a little profits on the short side, knowing that we're going to get a bounce at some point in a wave 4 correction, right? And where should it not go? It should not go as high as 48.92. So I'll make this a little 4 here. All right. So in closing, the pound is expected to move, and we're reaching the target. So again, peel off some profit. Yes, this could go lower before it's over, but we know that once you reach a battle zone, it's good business to peel off a little something, something, bank those profits before then allowing price to make its correction. So in closing, once this 3 is over, we can see price move above 44. It doesn't mean it has to, so this labeling will change. The reason it's been expected to stay below, because we're in the midst of this subdividing wave count. Now that we're coming to the higher level 1, 2, 3 blue, we're going to expect more time consuming, more robust retracement. So we could go back above 44, we could go back above 46, but we can't go above this 48.92. So that's why I'm going to place the wave 4 over here, letting you know once 3 is done, We're going to look for chopping sideways to higher correction, then a trend continuation down. All right, let's go to the software.
William says, thanks for that fish on the pound. 1.40160.
Yes, that's right where it went to. So, and it's going to be struggling now that it's hitting it because it is a battle zone. So we see based on the software what's happening. Al, remember we talked about selling 4-hour slingshots and daily slingshots for weeks, over and over and over and over. And when we're in these strong moves, we don't always see big robust separation. There could be small degree separation. Well, when I get small degree separation on a daily, that means I'm going to get large degree separation on a 4-hour. So that's why we keep this model. Sell H4 slingshots, sell D1 slingshots for as long as my daily, even though it's still deeply oversold, it's down. My weekly again is similar in that it is deeply oversold but down. What happened between your homework of last week and open of this week? It's extended further down, but look, it's starting to flatten out. What has to? It's maxed out. Right? My PAI is maxed out right there. And when it maxes out, the only thing it can do is either flatten and or turn and start hooking back up. But this is clearly still bearish at the point, even though you say, well, Gary, man, this weekly is way oversold. Again, we know what happens when it's way oversold. It could slingshot lower and lower and lower for months, and price still keeps dropping. So it doesn't mean that we're going to get a massive weekly style retracement back up. I don't think that's going to happen. I think we could get part of a weekly style retracement somewhat muted like before, and yes, it could last a week or two or a few weeks, but ultimately should slingshot lower and lower in the months to come. That's the bias with the pound, stair-stepping lower and lower and lower and lower over the coming months. Just a matter of the wave 3 ending and going up in wave 4, we should see some sort of retracement, yes, and we're likely to probably even get a little bit of this weekly involved at some point. And it doesn't have to mean it's going to go all the way from oversold to overbought. No, it could just be the PAI simply turning up and flipping over, turning up, flipping over, turning up, flipping over. Because notice the price action kept slingshotting, yes, but the trend momentum's basically just stayed flat to down, flat to down, flat to down, until much later we finally got the crossover to the upside. So my bias is continue to sell the rallies in a downtrend. And look, William Bruce, those levels are there for a reason. Not to say it can't bounce 8, 10, 15 pips and make new lows again, but it's a battle zone. It should struggle. So when it hit that 4160, it's bouncing and struggling a little bit. Does it mean wave 3 blue is over? It's possible. Or it could continue to grind lower. So the key is going to be, it doesn't matter. We continue to watch the line of progression, and we look to sell 4-hour and daily slingshots. My weekly is down, flat on the PAI, because it can't do anything more than flat. Even if it starts to turn up, I'm not expecting too much of it other than to flip right back over. Everybody good? So my weekly, even if this is wave 3 over, William Bruce, and we're climbing higher in that 4, we might even see the PAI go up a little bit for a week or two, and then end up in one of these little blips, you know, a little blip higher, turn over, a little blip higher, turn over, and it might last a week or two, move lower, a week or two, move lower, a week or two, move lower, right? But that's where this wave 3 going to 4 should come into play. Yes, it should last a few days, could last a couple of 2-3 weeks, but we're not expecting it to go above that 148. Well, Gary, that's 700 pips away, right? That's part of my 3-4. It may correct for a few hundred pips. It's done it before when the weekly's turned up. It's done it, it's done it, it's done it. And in each case, when the weekly starts even the slightest little bit of a turn, it does move 100 or 200 or 300 pips in that correction. And that's why I want you to peel off those profit. So any questions? The monthly is still down. My weekly is still down. Yes, it's oversold. in deep oversold territory. The PAI is flat, but it's still down. My monthly, now that I have it on the monthly, clearly shows it's still pushing lower and lower. It too is oversold territory, but that doesn't mean it's going to make a massive surge higher. It simply means that we could stay down on a monthly perspective, stay in oversold territory for months. And my weekly will depressurize, slingshot lower, and eventually the monthly can do what it's done before, start to turn back up temporarily, only to slingshot further down. So long term, if I'm going to paint this, James, as the dollar index keeps strengthening and breaks 100 and heads up towards 100, 105, 110, 115, 120 over the next couple of years or so, I'm going to expect this monthly will slingshot lower and lower and lower and lower in the coming years as well. And at some point, yes, it's going to need to depressurize. It's done it once over here and flipped over. It should do it again. So everyone clear on the pound. Euro expected further down, pounds expected further down. Even though these corrections do last as much as a few weeks, it still should end up with further downside long term. My daily is still pushing. So yes, we could see a little more downside William Bruce. It's going to struggle, but we're going to see some sort of reversal coming. And when it does start to reverse, I want you to start thinking in terms of that 1, 2, 3 blue going up and 4 blue, and allowing the daily to move and go back toward overbought territory. I'd love to see that, and I'd love to see this weekly take form and shape where it depressurizes a little bit, so we get one of these. Maybe last 1 or 2, 3 weeks. 1, 2, 3 weeks, 1, 2, 3 weeks, and this correction, and then the weekly turns back over. That's what I anticipate in the coming weeks. That yes, the weekly will depressurize and slingshot lower. To what degree do we get smaller one or larger one? We'll just have to watch price action. And up and until then, we're going to expect at some point we're going to get that retracement, and we're going to see this reverse and start depressurizing. But long term, we're going to expect this high low be a lower high and a lower low. The lower high must stay below that 148 in order to be a 1, 2, 3 blue up and 4 blue. And it doesn't guarantee that, well, Gary, does it mean it must rally 700 pips? No, it does not need to rally that high. It could come up here and slingshot lower on that weekly, or my weekly could stay flat to down, and we get a daily slingshot, which lasts a few days and then engages back down. So the motto is the same. As long as my monthly and weekly PAI and trend momentum are down, we're going to continue to look to sell daily and 4-hour slingshots. But at some point, we're going to expect we might even see a 4-hour slingshot fail and go higher, a daily slingshot fail and go higher, and that would set the tone for this weekly style retracement. That would be good. To get a little retracement, weekly start to depressurize, to form one of these slingshots as we grind up in 4, end it, and then continue with downtrend continuation. So any questions on this process? Any questions? All right, we'll continue to move on. S&P. Andres, how about that S&P? S&P is making a little bit of an attempt for a rally. I don't think this is anything but bearish. You'll notice I cleaned up my charts. 1 second, please. All right, sorry for the delay. So I've cleaned this up. There's still a lot of labels on here, but what appears to be unfolding in the S&P is we're breaking down. We're breaking down on the bearish scenario. The question is it the more bullish of the bearish, or is it the bearish of the bearish? What does that mean? The bullish of the bearish, or the bearish of the bear? Elizabeth, I'm coming to join you, honey, is the bearish of the bearish. And this wave 4 correction down here is the bullish of the bearish. And because we kept breaking and we broke below that level, guess what? We can no longer have that C going up in D, and it's very unlikely to see that extensive subdividing wave count for a 1 going up in 2 just yet. So what it appears it is the 1 2 1 2 1 2 continuing in the 3 of 3 down. The question is it my 3 of 3 down to complete wave 4 green over here, or is it the multiple 3 of 3 of 3 of 3 of 3 3 down in the bearish, meaning it's Elizabeth, I'm coming to join you, honey. So part of this correction, my 3 magenta going up in 4, right? We got a 1 2, and so far that wave 3 is subdividing, and it looks like it's a 1 2 3 4 5 green, making 3 magenta, and this is part of a retracement for wave 4. Well, Gary, you got wave 4 way up here. William Bruce, does that mean it must go up and break 1948? No. It could, and it can go up this high, but it can't break what? 1983. Why is that? Because if this is my 1 magenta, 2 magenta, 3 magenta, and we're working on 4 magenta, then we should not break below wave 1, into the area of wave 1. So everyone, put on your chart for the S&P this 1983. That represents my swing point low right there, which occurred on December the 14th, 2015. December 14th, 2015. So William Bruce, if you're using JFD or using some other platform to watch the S&P, then I would just go to this date on a daily, whatever that low is, because it may be a little bit different. Put a do not cross level. Price must stay below that level, whatever it is. And if this is part of my 1 2 3 4, then we should see this rally up, go no higher than 1983, but doesn't mean it must go way that far up. And if we see price start breaking below the previous low, then it starts to lead down the path of the more 3 of 3s we have unfolding. So just because we break a new low does not guarantee that it's the Elizabeth, I'm coming to join you, honey, but it brings back the bearish mode, and we're breaking 1830, and we're going to go on and break the next level, 1813, and we're making a run down toward the 1730/1647. That should be a minimum. So I know I have this labeling over here, but it doesn't mean it's going to end above 1730 and go, because please remember our structure. On the overall structure, what does that mean, Gary? That based on this view, and I'll pull this into perspective, if this is Elizabeth, I'm coming to join you, honey, part of that A, B going down in C to complete wave 2, off to the chart here, then we're going to see what? We're going to see price, this is Elizabeth, I'm coming to join you, honey, come all the way down to 665 and below. It's not going to happen in a day or two. It's not going to happen in a month or two. It's more than likely going to happen in a couple of years to get down there, if it is the big one. And we're going to know it without any question when we break this 1350 area. Because again, we can't have a 1, 2, 3, 4 correction where wave 4 goes into the area of wave 1. So that leaves us with the wave 4 down here. Again, I need to tighten this up. I don't think this is wave 4 done here, so I'll go ahead and delete some of this. I don't think that is the case. I think this is definitely 3, 1, 2, and we're stair-stepping lower to complete this wave 4. If it is wave 4, and yes, it could go below my 1730, my 1647. It could go much lower, but it can't go below 1354. Everybody clear on that? So this is what the big difference is. If it's Elizabeth, I'm coming to join you, honey, eventually they're going to diverge by price going too low and taking out where wave 4 could possibly run. Well, Gary, does that mean you're still going to believe it's a wave 4 bouncing going higher in 5? If we come down and bounce off of, say, 1370 and then start moving higher? No, because that could still mean we're just getting a retracement to a lower low, retracement, lower low, retracement, lower low. But as we start to break these levels further and further, it becomes more obvious that if the market's crashing, we're going to end up being Elizabeth, I'm coming to join you, honey. more than we're seeing this bounce and start to go back up here. So my motto and my bias is we're going to make new lows, right? We still need price to break that 1830, which we came close to on Friday, but didn't quite make it. I suspect we're going to break that, and we're going to head lower, taking out that 1813, which is our next level of interest here, where we bounced off of previously. So not only is the 1830 of interest, but the 1813 right behind it. So that's this green line here. Once we take that out, I expect to see some strong downside movement. If it is, Elizabeth, I'm coming to join you, honey, then it's just going to continue to drift lower and lower and lower and lower, stair step, stair step, stair step, and eventually, James, we're going to get a nod that says, yep, it is, Elizabeth, I'm coming to join you, honey, because now we can't have our wave 4 move that far. It moved into the area of wave 1. And I know I repeat this over and over, but I want to keep reminding you that these levels are that important. So what am I expecting the S&P and the Russell, etc. to do? We need to see a little bit more of a correction. Could this be the end and it makes a new lower low? It's possible, but I'm expecting a little bit more robust move for a wave 4 correction before it's over and more time consuming, not just a couple of days. So let's go to the software. My daily is starting to depressurize. Doesn't that fit well with a little retracement? Right? Daily depressurizing. Trend momentum has not crossed to the upside yet, but I would expect during this correction we should see that. The daily should not only PAI start to depressurize further, but I'm looking for the trend momentum to cross back to the upside to work with this correction back up. My weekly, as you would expect, is still smoking to the downside. So long term, we expect that this will simply be a correction, yes, but that it should continue lower in the coming days as we ultimately see this correction over and start moving back down. Okay, so the weekly, as I just mentioned, is clearly trend momentum and PAI down. Al, that doesn't bode well for a massive retracement back up this way. Our wave counts are slowly but surely diminishing, and we really don't have any of them saying we're going back up this way, right? We need further downside for that wave 4 to complete before we then see any type of move higher, and we're certainly not going to see any of that with the weekly trend momentum and PAI down. That's how easy this is to read. And remember last week when it tried to be a little bullish and we said, nope, we got the Kraken being released. We expect this would make a new low. It slowly but surely moved lower, and it was several points before it could make a new low. And we said, look, it's due to make that low. And I've been talking about this 1860, 1830 flash crash bottom reversal. Well, we're right at it again. And we took the first portion out. That's bearish. My trend momentum and PAI down are bearish, but look how much we had to drop from the point of making this Kraken release to make a new low, William Bruce, to dramatically dropping hundreds of points down to the new lows and retesting the previous lows. So nothing about this little bounce right now is bullish. Right, James? Yeah, price can go a little bit higher, and yeah, it could grind up a little bit more. That's okay. But it's not bullish. It's bearish. And as long as that weekly looks like that, it's going to remain so. The monthly's no different. Monthly's extremely bearish as well. So when we combine the weekly trend momentum and PAI down being bearish, we combine that with a monthly pushing lower, it bodes well for what? Further downside, not upside. So I'm not expecting this, even with this little correction going up, I'm not expecting it to be very robust in a sense where we know how far it should go and where it can't go based on that 1, 2, 3, 4 scenario. But we're also looking for further downside longer term, obviously. Any questions on the S&P? So Andres, we're in the middle of a little bit of a correction. The correction should be tepid and muted for a while. And yes, it should last probably a few more days, could even last another week or so. But again, why is this not anything more than a simple correction? My monthly is absolutely screaming at us. And remember what we said about on the daily, we still need to make a lower low on this weekly. And then on the monthly, we haven't made a lower low on the monthly yet. So that's why it's extremely high probability that we're going to see 1830 taken out. And we're going to see that 1813 taken out. That's important levels to watch. But I suspect once this little correction is over, we're going to see strong downside movement to follow. My monthly says it. So remember the Russell 2000, Andres? How we started to see this and we said, look, not only should we break a new low, but we should make a run toward the cloud. Keep dropping. Well, that's the status on the S&P as well. Monthly trend momentum and PAI down, says Al, we're going to see limited upside. You should not try to buy the S&P and be in any type of long-term up position, because it's going to scream at you saying, no, 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 you should be long-term down position. My monthly says it, my weekly says it. So far, so good. Monthly, weekly trend momentum PAI is very bearish. Daily sitting there saying, yeah, I'm oversold, but I need to depressurize. So we're going to continue to do what? Sell daily slingshots. And during this little correction, remember, it should be in three waves. Maybe that's my A, we come down in a B, we go back up in a C, and then it ends and it's over, and then downtrend continuation comes. But don't be surprised. Any surprises should be to the downside. Everybody with me? Any surprises in the S&P should be to the downside. So rallying up toward this way is not a big surprise. Right? What would be a surprise? We break 1983. That would be a surprise because it's not allowed to. But any of this little up correction is not the surprise. The surprise should be to the downside, meaning we're going to get much further downside to come. And yes, this target I've had on the charts, William Bruce, for months now, is still on here. That's why I haven't moved it. And I know I've had wave fours and different things all over the chart, but I'm still representing. It's hard to do it on a chart and show all this, so I have to separate it some way. Even if this is the bullish of the bearish, meaning wave 4 is going to complete and we're ultimately going to head higher, then we're still going to see much further downside before we get there. And this is not the bottom. Monthly says it's not the bottom. Weekly says it's not the bottom. The behavior, James Brown, of that daily slingshotting lower and lower and lower says it's not the bottom. Nothing about this says this is the bottom. The only thing of a bottom it may be is a simple little retracement before another lower low. Right? So even best case scenario, if this is my more bullish outlook, we get a 3, we go up in a 4, we're still going to go lower for a 5 and 3 blue, and then a 4 blue, 5 blue for wave 3 black here, then a 4 blue, 5 black, and then work its way down to complete this wave 4. 1, 2, 3, 4, 5 to end this wave 4 here, but that's why this is still projected to go at least down here and could go much further and still be a wave 4 correction. But the Elizabeth, I'm coming to join you, honey, is definitely more bearish. It's subdividing in 3 of 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 3, and it goes on forever and ever. That means we're going to see, as we've seen the last several years, it grinding higher and higher through to buyouts and buying toxic debt and the government's intervention, TARP and this and QE 1, 2, 3 and all the different things they named it. Well, market crash means we're going to see the inverse of that, and it's going to subdivide and subdivide and subdivide and subdivide and work its way all the way down to 665 and below. 1350 is going to be critical, but in long term, we still should see, even though the bullish of the bearish, we should see price go down several hundred more points. Any questions? So Gary, what are you expecting? What's the primary? Primary is we're in the middle of a little retracement that I would like to see, and I hope to see it last several days, and even maybe we see the weekly turn up and depressurize. Maybe it lasts a week or two. That would be great. Just chopping up and down sideways to higher, but I don't think it's going to last forever, because we should get a lower high and then another lower low, even under the bullish of the bearish. If it is the bearish of the bearish, then we're going to continue to see less and less robust retracements, less time consuming, and continuation of lower lows, lower lows, lower lows, lower lows, lower lows, and of course lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. And that's where all these streaming threes of threes of threes of threes come into play. 3, 4, 5, 3, 4, 5, 3, 4, 5, 3, 4, 5, 3, 4, 5. And once all these right here, Al, finish 3, 4. What do we mean by 3, 4, 5? 3, 4, 5, 3, 4, 5, 3, 4, 5, 3, 4, 5, 3, 4, 5. Guess what? After we subdivide and do all that, that's just another 1. Then we could get a correction 2, and then a 3, 4, 5. Subdivide, 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 subdivide. That's how we're going to get down to 665 and below. No other way, William Bruce, to go that far without a lot of subdividing wave counts. And after all of this 3 of 3 of 3 goes, we're going to end up with a 1. Then we go to a 2, 3, 4, 5, and continue on with the subdividing wave counts. Down to 1350. Below, break below 1,000, head towards 665 and below. So what's my trading strategy right now, immediately on the S&P? Well, we look at the line of progression. We're expecting that this is part of a correction, and it's not going to last forever, but we're not expecting any smoking lower lows just yet. Why? Because the daily's starting to turn up. Everybody good? The daily is starting to turn up. So that's part of this daily style retracement. How cool is that? Daily's turning up. Al, we're going to grind toward the upside in a chopping, overlapping, sideways to higher. Chopping, overlapping, sideways to higher correction. And my motto remains the same. Follow the line of progression. Follow the yellow brick road. Follow the line of progression. Monthly, weekly down, daily depressurizing. Then we want to sell that daily slingshot lower. I would love nothing more than the 4-hour to move from oversold all the way to overbought. The daily start to depressurize and allow it to depressurize for several days. S&P even grind a little bit higher. A good target for this baby to grind. As y'all remember the story about subdividing wave counts? That wave 4s tend to run back into the area of wave 4s in subdividing wave count. We had a 3, 4 there. My new 3 magenta, 4 magenta should grind over the next few days back towards this 1948. Could go a little higher. So that's why my wave 4 is here. So Gary, you think we're going to grind in a chopping, overlapping, sideways to upwards movement that could end up and should end up in an A, B, C, or 1, 2, 3 type of wave count, 3-wave move. And we should grind up toward this area to then end and move lower. Yes. So be careful to the downside right now during this correction. But once the correction is over, aka weekly, monthly stays down, a big daily slingshot, I'm selling it, and I'm going to look for price to eventually break back down and make new lows, meaning once we take this low out, the only one left of interest is this right here, 1830, and then right below that, just a few ticks, is 1813. So put 1830, 1813 on the chart. That's the light green and the dark green here. And yes, I'm expecting this rally to finish and then make new lows. And if it's the bearish of the bearish, we're not going to go way up here and take as long. If it's the more bullish of the two, it should take longer, but we're still in both cases expecting a correction. My bearish of the bearish is expecting a correction, and my bullish of the bearish is expecting a correction. And both, once they're finished, expect downtrend continuation. How cool is that? Right? Any questions? So one more time, my daily's depressurizing. This could last, and we might even see the daily engage, disengage, go up higher, last a few days. I'd love to see the daily start to turn and move up, as far as the trend momentum. That's what I'm looking for. And when I start to say, ow, I got a daily trend momentum and PAI up, then of course we're going to look for further upside. Limited so, but further upside, at which point we're going to expect this probably a run back towards that 1948. So my little trend line I had off of here that we broke below, tested, went down, it's likely we might make a run back towards the trend line again, because this is my 3-4, then another 3-4. It's likely to make a run back towards that 1948, 1950. And what does that also represent? About a 61.8% Fibbo retracement. Okay? So we're looking for it to retrace into the sweet spot and then reverse and head back down. That's what long-term trend continuation should do. So in closing, I'm watching for this to depressurize further, James. I'm a little cautious to the downside temporarily until this correction is over, but no questions asked. Long term, we're making new lows. We're going to take out 1830, we're going to take out 1813, and we're going to march down toward that 1730, 1647, which right now is over 240 pips to get down there, 240 points. So yes, much further downside. And please remember, this can be a up, it can come down in a B and make a slight lower low, go up in a C in a expanded flat correction for that wave 4. Or it could grind in any numerous types of corrections, but the bottom line is the same. Line of progression is when I'm selling, and I'm selling the next daily slingshot. And I know we're flat right now, and I know the 4 hours depressurizing, but the bias is we need further upside to go before we're done in this correction. So yes, my daily is kind of flat. That's okay. I expect it's going to turn. This 4 hours should fail. Right? My daily is flat to down. And ultimately, if this is part of my A and we go down in a B, maybe the 4 hour goes a little bit lower, but it should not break new lows. Possible with the expanded flat, but the bottom line is I'm expecting more of a chopping, overlapping, sideways to upwards correction. And again, it's going to be up, it's going to be down, it's going to be up, it's going to be down, it's going to be up, it's going to be down. So it's not go from here straight up to 1948, straight down from there. It is going to stair step its way up and stair step its way down, and should ultimately end up in a three-way move. Well, on this 4 hour, it looks like one. A little A, a little B, a little C. Well, I don't think that's the end of it, because I think it's too premature and it hasn't taken enough time. So what are you saying, Gary? I think we're going to rally towards 1948 before we go smoking and making new lows. And I'm looking for this 4 hour, as it's done before, to engage, disengage, fail, move up higher, allowing the 4 hour to move in overbought territory, allowing the daily more time to depressurize to form that slingshot. So my trade alert is to sell the daily slingshot in the coming days, likely to see price chop up and down, chop, 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 sideways to higher, and more than likely should, based on what we're seeing so far, make a run towards that 1948, because we got a few things going for it. Previous subdividing 1, 2, 3, 4, another 3, 4, and frequently wave 4s in the area of subdividing wave 4s make a run back toward that same area. It's just on your end. It's keeping up on the recording. All right. So again, chop, chop, chop. Should grind higher over the next couple of days as we depressurize. My 4 hour continues. Well, when's a good time to maybe scalp it to the upside, Andres? When that 4 hour gives up. When I see this 4 hour that's turning over, turn and hook back out. That means we should see it rally back toward the previous high and make a run even higher. So you can scalp it, but remember, it's not going to be in this thing for weeks or months to the upside. It's simply a short-term scalp before another selling opportunity to go lower. Okay? Well, Gary, could the 4-hour re-engage and go down a little bit more? Sure it could. When it does give up, turn and hook out, that's when I'm going to look for a potential scalp to the upside to make a few points. Then, in the coming days, I'm looking for the 4-hour to make its rally all the way in overbought. The PAI turn and hook back up and travel into overbought and make a run back up as we ultimately look for that wave 4 magenta to complete and another downtrend continuation to follow. Alrighty. To no one's surprise, oil is continuing to grind, and we reached our target, the first one, of 2950/2920, and we went a little bit lower. We're sitting here at 2895. Next up, 2610. Gary, does that mean we're going to go straight down to 2610? More than likely, yes, with some modest, small retracements. And if this is correct, where we're subdividing 1, 2, 1, 2, 3, 4, and now we're subdividing in another 1, 2, 1, 2, 3 of 3 of 3 down to complete this wave 3 blue, then we have a long way to go. Right? So Gary, is 29 the bottom reversal? No. Is 26 the bottom reversal based on this subdividing wave count? Absolutely not. Well, what happens after 2610? We go lower. And I'll give you the next target below that as we talk about it. And we move down towards this subdividing wave count. But yes, things only seem to be getting worse. With the latest news of the sanctions being lifted, they can produce another 500 barrels a day to add into the mix. We're going to have way oversupply with a demand that is not slightly growing. I think I saw somewhere it's like 0.9% growth in consumption versus all that oil on the market. We're not bottomed. William Bruce, no way, based on the old economics of supply and demand, is oil prices ready to go robustly to the upside yet. We need that bottom reversal, then it's going to happen. And what do we need as far as the economy? And what do we need with supply and demand of economics? We're going to need the supply to start dwindling. And when your supply dwindles and your demand picks up, that's when oil price is going to make its big reversal. It's due for a pop. You can't keep something down forever. It's due for a pop. But I don't think even with a little pop upwards, that means it's the bottom reversal. So all signs and symptoms, not only on the PAI and trend momentum saying on the higher time frames we're going further down, but based on supply and demand and the oversupply of oil right now, prices can't go soaring, the abundance of supply, we can't go soaring to the upside with a bottom reversal. So we're going to pay attention to the news, not so much listen to what the talking heads say, but based on the oil reserves and how they're starting to deplete, that should help start lifting price. So William Bruce, your Canadian peso is not getting any relief. It's just not going to get any relief anytime soon. So that's why I still say we got much further to go. And I'm slowly but surely picking off and taking out targets, 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 and targets. And if this is of late the latest subdividing wave count, then we should not see price go back above this little swing point high here. We should see it stay below that swing point high and ultimately continue lower. And that swing point high is sitting up here at 31.73. So if this is a 1, a little ABC 2, and we're moving lower in 3 orange, of 3 green, of 3 blue, of 3 black, etc., subdividing, 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 then we're going to expect that we see limited upside, further downside. Limited upside, further downside. And then once this wave 3 orange is complete, maybe we come down to the 26 range, and when we bounce back up, we should not go into the area of wave 1 here. So yes, subdivide, 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 subdivide. Eventually we're going to get a wave 3 down in green, go up in 4, then we shouldn't come into the area of wave 1 here. And how's that helpful? Because now, as I know I'm watching depressurization and we talk about, well, we're going to sell daily slingshot, and I watch a daily depressurized price rally and it stays below the areas it's supposed to, and it starts engaging, then I know I can sell it, yes, and I can put my stop loss above that swing point low, because price should not go into that area, so I'm protected. Engaging slingshot means we found resistance. And engaging slingshot to the downside means we found resistance. So if my no here, my 1, 2, 3 going up, can't go into the area of wave 1, then that should mean it's resistance. And if I have a depressurization, a slingshot engaging, and it happens to be below that level of resistance, then if I put it above that level of resistance, I should be good. Part of trading is finding battle zones, just as important as it is getting the line of progression. I need battle zones to hide behind. I need to be in a sell cycle and sell from resistance in order to sell. I need a buy cycle and I need support in order to buy from. Any questions on black gold? Limited upside, should not cross 31.73 and should go lower. Right now my major level is this 38 up here, because this is 3-4 magenta subdividing in wave 5 magenta down. And up and until we subdivide, we should see these subdivisions hold true, but the major do not cross level is still up here. That's why the red line is there. The one likely should not cross is this one I just mentioned, because if this is 1, 2 orange moving lower and 3 orange, when 3 is over, moves back up, should not go into the area of wave 1. And then when we go 1, 2, 3, 4, 5 orange, making 3 green, when we go up in 4 green, we should not go into the area of wave 1 green. All right, so everybody keep that on your chart. Knowing these little swing points are very important. My swing point low here near the 29.50 area and the previous swing point low here. Both of those are going to hold very strong importance as we subdivide, 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 and these little retracements unfold. They should honor those. But up and until then, what could this do? Remember, subdividing wave 2 could go much higher, yes, but it should not go above this level. Maybe this wave 2 is not finished here. It looks like it is because we broke down and went lower, and it's struggling to go back higher. So that's why I watch these and I watch my line of progression. So what's my trading strategy? My trading strategy is continue to sell daily slingshots to the downside, as we expect we're going to make a run towards 26.10 next. We reached the 29. Now next up is 26. And we're going to expect that will come into play in the coming days. Limited upside, further downside. More oil supply to already abundance of oil, then we're going to continue to push price lower. All right? Any questions? Marty, you feel good about black gold, Texas tea, the Beverly Hillbillies? We're breaking down. People thought, Gary, you'll never get to that 35 range when we bounced up. So maybe it's truncated. I said, I don't think so. It's possible, but I don't think so. We got to take out some critical levels before we then would say, yeah, it looks like it's bottomed. Hold true to the picture until it's over. And the same scenario. Daily continues to do what it's supposed to. Slingshot lower, 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 lower. And I'll do it with the big red cursor for emphasis. Lower and 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 lower. That's how we continue to push down. And why do we expect more of the same? Because my weekly, yes, it's oversold. Yes, it's oversold, but it's still down. And Al, what happens when a weekly trend momentum and PAI are flat to down? Why should this start to flatten a little bit? Because we're maxed out. Can't go any further. We're getting to the point where we can't go much further. So it's going to eventually start to depressurize on the weekly. Good. Part of a healthy, strong downtrend continuation is the weekly's depressurizing and moving and slingshotting and moving and slingshotting. So I don't think we're over, even though the weekly is near oversold territory. I don't think this is going to represent the bottom reversal. I think that's another small correction before further downside. My monthly is similar. Yes, it's still down. Yes, it's near oversold, but it doesn't mean we're ready for that reversal yet. So keep an eye on and listen to the markets as they talk about, there's a news release every month that talks about oil reserves. So I'd pay attention to those, and if they continue to increase, that's only putting more and more strength to the downside. If they start to deplete, then that could be the beginning of a bottom reversal. But for now, if Iran comes on board and starts producing 500 barrels, in addition to OPEC and everything else that's going on, look out. We could go down to the teens. I said we reverse somewhere in the 20s at least. That still holds true. Could we go to the teens? It's possible. So I don't want to say Oasis is ready to go soaring to the upside yet, our stock play. I still think it's a great company. I'm still watching it, and I know it still has further to go. And hey, so what if it goes down to $4 or even $3? As long as it's still in business when oil reverses, that baby's going to go smoking to the upside over the next several years. And it'll double, triple, quadruple, go to 16, 20, 20, 30, 40, 50, who knows? All depends when we bottom and reverse. So we have a lot of exciting things planned. And speaking of exciting things planned in 2016, Al, do not miss class tomorrow. Bill W., Andres, Bob, Greg, Harold, Ian, James, Marty, Roisin, everybody make certain you attend class tomorrow. I'm going to talk about how do we take the Ichimoku and utilize it when we're talking intraday. Well, Gary, I know it's a strong downtrend today, and when can I get in? Well, we know from our normal cycles, we talk about, well, when you're oversold, you wait for them to depressurize, and the higher time frames are saying down, then we sell slingshot, 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 right? And when we get to the point of these higher time frames, it takes many hours, 12 to 24 hours for a 4-hour slingshot to form and engage on average. And a daily, it takes several days. I'll look that information up for you on oil reserves and let you know, John. I don't remember off the top of my head, but I'll look it up in the release calendar and let you know when it's released. All right, so part of this equation is going to be, well, how do you know when you're in a strong downtrend and you're like, man, I want to get in? And price starts to rally and you go, oh, I should have gone in, and it keeps going lower. And then it gives a little retracement. I should have gone in, it keeps going lower. Well, we're going to use Ichimoku on the same things we use the trend momentum and the PAI. As it cycles, we expect that the lower time frames, meaning my workforce, as they start to depressurize, you're going to get a little bit of a rally. Then when they flip back over and join the foreman and workforce and daily, etc., then we're going to get another push lower, right? Part of that slingshotting. Well, you can use Ichimoku the same way. When we're on a higher time frame, like we have a daily below the cloud, well, oil's so negative, we got a monthly below the cloud, still moving lower. We got a weekly, obviously, below the cloud. We got a daily. Everybody's below the cloud right now because oil has just been falling off a cliff. But how can we use these as an advantage for us to know when it's the next time to take the next move? Well, for intraday, you can take the direction of the daily. So nothing's changed here, right, Al? With the trend momentum and PAI, we talk about, hey, as long as my trend momentum and PAI are up, we're expecting price to rally. When the trend momentum and PAI are down, we're expecting price to go lower. Well, same thing with Ichimoku. When we're below the cloud, this is part of a bearish scenario. And as my daily still below the cloud, I then will go to the lower time frames, like the hour. So I use a daily, an hour, and either a 5 or 15 minute, depending on how much I want to scalp and how quickly I want to scalp it. So again, I'm going to cover this in great detail tomorrow, but I wanted to whet your appetite. So when I have that below the cloud, we're going to get the lower time frame start to go above the cloud and then reverse back down. And as I go, my 1 hour still below the cloud, my 4 hours below the cloud, my dailies below the cloud, that's bearish, obviously. So then I would come to say a 15-minute and say, okay, 15-minute, when you go back above the cloud and start to break below the cloud, that's when I can go short. Well, notice, isn't it the same thing we talk about? Well, as we start to go above the cloud and break below the cloud, and I have a 1 hour below and a daily below, that means we're expecting downtrend continuation the next several days, and I'm watching the cycle. Same thing as my 15, 30, 1 hour, 4 hour. Follow the buy and sell cycle. Well, now you have a new visual. When I started to break below, I had my 15 moving lower, I had my 30 moving lower, and I had my 1 hour moving lower. Wasn't that the same thing, Harold Glenn? When we talk about, hey, yeah, we're going to get a retracement, and then we're going to turn over and head back lower. Well, it's going to cross the 15 to the downside faster than it is the hour, and it's going to cross the 30 faster than it does the hour. The hour crosses faster than the 4 hour. The 4 hour crosses faster than the daily, etc., etc. So the same visuals, knowing when is it bearish. So as we go above and break below, that's part of another sell. My daily's still down. My Foreman is still down. So when an hour goes above and breaks back below, I can go short. And when it breaks back above and breaks back below, I can go short. So intraday, when I'm watching some of these little retracements, we're going to see what? Intraday, we're going to see a little retracement back above the cloud, then it starts to break back below. Well, look at some of these. Well, Gary, it looked like it wanted to break and it went back up. Looks like it wanted to break and went back up. And then it did break a little bit, but then it went way back up. Remember your cycles. So it's just not that phenomenon of above the cloud to below the cloud. You tie it in with the trend momentum PAI. And we'll go over that in great detail tomorrow. But it will help you, Kevin and others, it will help when we're talking about, well, I just watched this fall all day long. And yeah, it would rally, but it kept falling, and I was just afraid it was too late to get in. I was just afraid it was too late to get in. That's part of my what? Trend momentum PAI cycles on the time frames. And once I see it break above the cloud, then back below the cloud, if my 15 is down, my 30 is down, my 1 hour is down, I'm selling it. Everybody type in yes. So say that again, Gary. I got a daily candle, white line, daily candle, the line here and the candles below the cloud. My 4 hours below the cloud, my 1 hour may be below, and then I watch my 5 and 15 go above and cross back below when my 15, 30 are still down. That's just like the 15-minute depressurizing to slingshot lower. Isn't that what it's supposed to do when I got a 1 hour, 4 hour daily down? My 15 is going to depressurize the slingshot lower, lower. Eventually my 30 will do it. Eventually the 1 hour is going to bottom and reverse. Then it's going to do it. And as long as the 4 hour and daily is still down, yeah, the 1 hour should depressurize slingshot lower and lower. Well, now we have a new visual. We can use the same thing with price action going above the cloud. Then when it breaks back below the cloud, as long as I got my trend momentum and PAI, Foreman and workforce, saying down, when it breaks that cloud, I'm going short. What's the difference over here? Well, by the time it started to break the cloud, it was starting to engage up. Well, no, I'm not going to go short there. See how magical this is? Versus over here to the left, let me turn my auto scroll off, versus over here to the left when it started to break the cloud and went back down, it was topping and rolling and heading lower. And well, that's a little too far, but you get the point, right? So far, so good. Turn that back off. But as we talk about this, this is what it means. When it goes above the cloud, starts breaking below, as long as I got either engaging slingshots lower and my 4 hour workforce and Foreman and workforce are saying down, sell it. And intraday, if I go to a 5 minute, I can't expect this to make hundreds of dollars on a move, meaning, price wise, or in oil drop multiple dollars down, but it could move substantially lower all depends on the cycles. So we're going to use this eligibility when we break above the cloud, then break back below the cloud. As long as my trend momentum and PAI are saying lower on what? The foreman and workforce, we can take that sell intraday. And that will help you visually to know, instead of watching the euro drop 200 points and the whole time you started seeing it, it was like 50-point drop. You go, is it too late to get in? And then it drops 100. Oh man, too late to get in. 150. Oh man. Watch for it to go above the cloud on the 5 and 15, then break back below the cloud when my time frame's cycling, saying, yeah, 4 hour down, 1 hour down, etc. We can still sell it, but it'll help you with your stop loss, because once we break from above the cloud to below the cloud, we can use the top of the cloud as a stop loss. Remember that when we talked about Ichimoku, that class? That when we see the top of the cloud, bottom of the cloud, this should act as support. This should act as support. When it comes from below, it should act as resistance. When it comes from below, it should act as resistance. Well, if I'm going from above the cloud to below the cloud and I'm breaking out, then I know that, hey, if I'm starting to break this, then this up here should be major resistance. And put my stop loss up there. And on these lower time frames, it can be a nice little stop loss. It's not going to be a huge stop loss. But again, if I drill down to the 5 minute, that same rule applies, but we're in for a much shorter duration than we would be for the 15. Fair enough? Then there are times when you could do the same principle on a higher time frame for day traders and position traders. Well, Gary, what happens when my 1 hour breaks above and breaks back below? As long as that 4 hour and daily are down, you can sell it. Everybody good? When it goes above, it comes down, and I got my foreman and workforce saying down, my daily and 4 hours say down. When my 1 hour breaks below, can I short it there? Yeah, and use the top of the cloud as my stop loss. So in closing on Black Gold Texas T, this little retracement should be short-lived. Yes, we're due for another retracement, but yes, we're not expecting a big robust movement higher. We're expecting the stair step lower and lower. Next target in the equation is 2610 area. That will come into play. Yes, we should get a little more chop sideways to upwards correction when the time frames depressurize, but as soon as they join forces back down, look for this to continue to grind. 2610 is next. Could we go much lower? Yes, we could even go into the teens. It depends if these 3 of 3 of 3s are truly playing out as expected. And that means, how do I know? James, that means it must honor these 1-2s. Should not break above that 2. 1-2 orange should not break above this 2. And we continue lower. And then once we go 3 up and 4, should honor the 1. Then we go down in 5. We get a new 3 here in green. Then as it depressurizes, should honor this wave 1 green. And then when we go 4, 5 down and complete wave 3 blue, then we get a wave 4 blue correction. It should honor the wave 1 blue way up here. So yeah, we could see substantial retracements in the near future and still be part of that subdividing wave count that still goes lower. And yes, breaks 38, breaks 41, makes a run towards 48 up here. But no way, shape, or form, even when this wave 3 blue is done, going up in 4, should we break 48? No, it's over here, sorry. Wave 1 blue is down here, which would be about $44, it looks like. Not my wave 2, my wave 1. Everybody get the drift. So wave 1's down are important levels when we start to see those retracements. And if we're in the midst of these 3s of 3s of 3s, then every time a 3 is done, we go to a 4. That's what 3 of 3 of 3 down means. I should get a 3, a 4, a 5, another 3, 4, 5, 3, 4, 5, 3, 4, 5. And part of that 3 going up in 4 should honor the wave 1 bottom. We go lower, then we produce the wave 3 here. Then this 3 going up in 4 should honor wave 1 green. And then 4 green, 5 green to make wave 3 blue. Wave 3 blue should then honor my wave 1 blue over here and not go above it. Fair enough? So it has built-in do not cross levels. That's what I love about Elliott wave and subdividing wave count. It gives us targets, based on Fibonacci's and ratios of Fibonacci's. And it gives us do not cross levels, GPS turn-by-turn instructions on where price is going. And where's black gold going? It's going further down. Yes, little corrections, modest corrections. Right now, up until wave 3 orange is done, we should not cross this low here. But up and until it is finished, we could see price not cross the wave 2 high there. Let's look at yellow gold. Part of this correction, and I still say, William Bruce, we're not quite finished yet. And I've cleaned this chart up a little bit too. I've been busy this weekend. That we're down to just basically 2 primary counts. Primary says wave A over here is not done. It's subdividing and still unfolding to the downside. The primary alt count says no, it's already done. We're in the early stages of a big reversal. Simmer it down. I'm holding true to the guns on further downside. Yes, I expect we're going to get further downside in the weeks and months to come. That we should go below 1,000, Marty, not make a run towards it and get down to this 1040, what was our low, 1050 range, but break below that and head down towards 1,000 and below. Yes. Part of this primary wave count of A still unfolding goes back to our 1 2 1 2 scenario, and we're in the midst of a 3 of 3 of 3 of 3 down. Remember that scenario. Well, we're in the midst of 3s of 3s of 3s of down, then we're limited how high these corrections can go. And if this is my 1 magenta, 2 magenta over here, and we're in the midst of a finish move higher and we're moving back up, then we should expect part of this 1 2 1 2 1 2, that yes, this could still be part of my little correction to the upside in wave 3, or it's part of this process we're doing now because we were invalidated this down move. Y'all remember this? It should not go back into the area of wave 1. Well, that meant this up move can no longer be a impulsive move. 1 2 3 4 cannot go in the area of wave 1 is when it's an impulsive wave count. But what if this is an ending diagonal to the upside? And that would be my 1 2 3 4 grinding higher in 5 to complete this move. Well, that means we should and absolutely must go into the area of wave 1 for an ending diagonal. Now remember the exception to the rule. When an impulsive wave count, you cannot ever have a wave 4 that goes into the area of wave 1. But when you're talking an ending diagonal or a leading diagonal, then wave 4 must go into the area of wave 1. So Stacy, that's where we are now. 1 2 3 4 going up in 5. We should ultimately complete this correction before then moving lower. And we're subdividing in this 1 2 1 2 scenario. And yes, that's part of this 1 2 finishing over here. I don't think, and it's possible it's over there, and we ended up with a little WXY, it's over, and we're starting to stair step down, but I don't think so. I think it's still going to turn over this way, and more than likely end up in that AB 1 2 3 4 ending diagonal to end this move, and then head lower. So the prognosis is, Marty, before we go breaking a new low down here, we should see a price go higher. Well, Gary, because it's in 1 2 3 4, can this 4 go lower? Yeah, it can go lower, but it cannot take this low out. Everybody remember the rules? If it's an ending diagonal, then again, it's still a diagonal, still a triangle, so my wave 4 cannot break below my wave 2. And because this is expanding, we're going to expect, yes, that we absolutely break the previous high and go much higher, as my wave 1 is the shortest, 2 longer than 1, but next up 3 is longer than 2, 3 is longer than 1, so my wave 4 is longer than 2, and then my wave 5 up should be longer than 3. Everybody good? Expanding. Ending diagonal, it's expanding, so my wave 1 is shorter than 3, and 3 is going to be shorter than 5. That's good to know because that means this rally, Marty, must make a new high and must at least go to around 1125. Right around 1120, 1125. So it must make a new high. Why? Because you can do the measurement from the swing point low to the swing point high, and then you take it from this swing point low to the swing point high. It must be longer than that previous wave. So from this low, sitting down here at 1059, oops, get on the right one, 1058.10 to my high of 1112.77. So somebody do the math on that. Get a calculator. 1058.10, 1058.10 from 111.12.77. So that's 58 to 08. That's a $54 move, roughly. So that means we need to move $54 from this swing point low here, and I'm just doing it in my head, but you can do the correct math. So my low here, Greg Tucson, of 1071.
54.67.
Add 54.67 to 1071.32. 1071.32 plus the 54.67. It must at least go that high. And whenever you give me that total, we'll say that, yep, 54.67 plus 1071.32 is 1071 plus 50, that's 1125.26. So we must go at least that high if this is this expanding ending diagonal. So where should we not go? Well, it's possible we could go a little bit lower, 1125.99. So there you go, Greg. We must go, at least go to 1125.99. That would be part of an expanding 1, 2, 3, 4, 5, ending this wave 2 to start its 3 of 3 of 3 of 3 down. That's still extremely bearish to go up to 1125 and above, top and reverse and head down. Where can't we go in this up move? We can't go above 1191. So let's simmer this down into that Cajun roux. Let's make it simple. Al, if price grinds up to 1125 and above, good. We want it to do that. That's part of this ending diagonal going up. Expanding triangle, ending to then top and reverse. It cannot go to 1191. It breaks that, then it brings this one into play. A is done when moving up higher. As long as price remains below 1191, we believe wave A down here is not complete. If it breaks above it, then it's starting to be very unlikely that this is still continuing, and now we're back to more likely being that we're going much higher already. I don't think we're going to go up that high. I think we're going to run towards 1125, 1135 area, top and reverse, and head down. Up and until then, is this wave 4 down complete? Is it complete? Well, it's possible we could continue a little further, but it can't go and break that low there. Everybody good? So Gary, what's that low again? That low is 1058.10. 1058.10. So I'm going to put a big green juicy line at 1058.10. 1058.10. 1058.10. So we should not on any point, Greg, we probably shouldn't see it break below this low. But if it does, it's limited. It should not break that low. And this could be my 1, 2, 3 if it goes a little bit lower than my wave 4 swings out here. And I still have a 1, 2, 3, 4 going up in 5. But based on the latest price action, we shouldn't see it break this low if wave 4 is done. And once it's done, we should start to see this baby stair step its way up, 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 and away towards 1125 and above, top and reverse, and head down. So far, so good. Now I'm going to do it in the big red cursor. We have, since this bottom, we have a 1 up magenta, 2 down, magenta, 3 up, magenta, 4 down, magenta, appears complete, could possibly go a little bit lower, but not below that 1058.10, because that's my wave 2 bottom. Can't have my wave 4 going below 2, no circumstance. So it must honor that. If it honors this low, then 4 is already done, and we should start to grind upwards. So Marty, knowing that, any type of sell to the downside, I'm going to be very cautious and quick draw McGraw, get in and get out. I don't want to say you can't sell anything on gold side, but you better be quick taking profits because it's expected to go that way. And even last week when we said this, we would expect it not to break any new lows over here and bounce and go up higher. It did that. And then when we started moving lower again, I still don't think, based on the overlapping sideways production, that this more likely to go higher than it is lower. Well, it's possible that that is my WXY and we're in the midst of a 1-2 working our way down, yes. But the likelihood is we're not going to go breaking lower. The likelihood is we're going to go higher first, then top and roll down. So let's look at the software. What can our good friend the software do for us? It can help us in our timing and what to look for in the coming days. So gold is obviously giving us a little bit of a chopping and downward direction. My 4 hours trying to depressurize. That's good. Could we see a little more downside? Maybe. I don't think we're going to get any new lows here, and we absolutely cannot get a new low there. So far, so good. So the likelihood of this 4 hour pushing and breaking a new low, well, maybe that wave 4 isn't done. I think it more than likely is based on what price action's doing. So I'd be very surprised to see it break a new low. But what can't we not do at any point? Break the 1058.10 down here. Everybody clear? So I'm showing you the same thing on the one chart now on the Ichimoku chart. And as we start to push lower, what am I looking for? Before I go long, Marty, I want to see the 4 hour foreman and workforce give me an uptick, upcycle. All right, let's go down the process. My daily is starting to depressurize and trying to slingshot higher. Well, my daily right now with the 4 hour turning over is remaining pointing up. That's bullish. Even though price is starting to move a little bit lower as the 4 hours turning over, the daily not turning and hooking out is bullish. Fair enough? So that's another reason with the daily engaging up, overruling the trend momentum. Y'all remember that? Let's go back over here. And let's get a, do I have one in here? Check mark X. Where's my X marks the spot? Haven't used this thing in a while. There's my X marks the spot. How about that? Trend momentum headed down, Al, is being X'd out, overruled, vetoed, because why? Trend momentum is being vetoed because my PAI is moving higher. Fair enough? I'm going to go ahead and close that for a minute. Get that out the way. All right. So because this is engaging up, Marty, that says we should be going towards 1125, Greg Tucson. What are we waiting for before we just jump in? We're waiting for a couple of things. A, we could risk right now and go long and put our stop loss below this swing point over here. Because at no point can we go below 1058. Everybody good? Well, Gary, man, that's $30 stop loss. That's a little bit rich for my blood. $30 stop loss. Ouch! Should not go this way, and it should go up, what? 50-something dollars. So when you think about, well, $30 stop loss for a $50+ almost 2 to 1 ratio is not too bad. But if you don't want to pull and put that big of a stop loss now, then I can wait till my foreman and workforce flip directions. And that's what we're expecting it to do. Now again, the X isn't on the 4 hour right now. That was from the daily, so I'm going to go ahead and remove that. So my 4 hour finishes moving down. My workforce finishes its cycle down. That's what we want to see. 4 hour Foreman and workforce giving us a buy cycle, Greg. With the daily still engaging up, that bodes very well. We're not quite there yet. We're grinding our way, and we're going to grind a little more sideways. But the bias is we're going to start to rally and make a run towards that 1125 area. Doesn't mean it's going to happen today and end today. I don't expect it to run, what's that, 15 plus 25, 35, 40 plus dollars in a day. It's possible, but not likely. But the bias is we're not going to go breaking this low. We're going to go moving higher. Well, if I don't want to use a $30 stop loss, I can put my stop loss below this swing point. Much better stop loss here, as far as price-wise, but it's still possible until that Foreman and workforce gives me that buy cycle that this could not be the end of 4 and we go a little bit lower before reversing. So you get that, Greg? So as a trader, I got to make a decision. Do I want to get in right now and put a stop loss down here? Yeah, it could be against me for a while. Ooh, that's tough news and tough sailing, but then it should reverse and go much higher, and I'll be in a positive trade before too long and risk it. Or I could take a chance that if I put it here, I could have it make a new low and still do what we're expecting. But that's why I tell you, use your line of progression. My 4 hours down, so I don't want to go long right now. Nothing about the 4 hours says I should be going long. When does it? When my Foreman and workforce changes direction, that's when I want to go long, and my daily's telling me that right now. 4 hours moving lower. Last multiple 4 hour time frames have been moving lower, 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 lower on those 4 hour candles, and my daily's still up. See how I look left? Go, nope, not ideal to get in yet. If I'm impatient, I want to get in, I either need to take a larger stop loss, or I need to be a little more patient and risk here. Yeah, we could maybe come down and make a new low there, but we can't make a new low there. Or I can say, well, trading is a risk. I can go long right now, put my stop loss below here, and now this one is a lot easier to live with. From current price to where 1087, no, that's not right, that's the high. My low is, come on, give me my low, 1071. Well, that's easier. Well, $15 stop loss is better than a 30 plus, so I can live with that one. My bias is this: 1, 2, 3, 4 is done. We're going to grind up in that 5, and we will not break this low. But again, structurally, it's possible it could, but just not this one. So now you're starting to see, well, should I put my stop loss here? Should I put my stop loss here? Or wait until my Foreman and workforce flip gears and join the daily? Then I can make it with a much smaller stop loss of maybe like $5. And that would be maybe this swing, wherever my swing point low is at the time in which my Foreman and workforce switch directions, then I can use that swing point low. Everybody good? Well, Gary, look, it's touched the purple, bounce, touched the purple line, bounce. Yes, it spiked below, but once my Foreman and workforce start to turn back up, 4 hour turns up, then whatever that swing point low is at that juncture, I could move it, maybe only a $5 stop loss. Any question? Bias is we're going higher. We just need that Foreman and workforce to finish that movement cycle, then a buy cycle. And right now, my 4 hours telling me it's going to reverse directions and go higher and join forces with the daily, because over the last several 4 hour candles, as we've been topping and rolling, moving lower, 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 lower. PAI, lower, 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 lower. Trend momentum, both are moving lower. My daily hasn't flinched. My daily said, yeah, thank you, but no thanks. I'm in the process of overruling that trend momentum, and I'm going to go higher. So in closing, I think we're still in the bearish mode, meaning we're going to correct up here. Then we're going to head down to complete that wave 5A down here to the right at 1,000 and below. And that as long as we stay below 1091, that is the prognosis. And yes, based on this 1, 2, 3, 4 scenario, it should mean we should run up towards that 1125 and above and put a target zone at 1125/1135. That's where I would expect to see that reversal and head back down. Any questions? Any questions on black gold, Texas T, the Beverly Hillbillies? Yellow gold. Long-term, more time-consuming correction, but that's part of the process. Sometimes they're quick, other times they're more time-consuming. But as long as we stay below this level here, 1191.41, the bias is we're going lower. First things first, because of the type of correction, we're going higher first, Greg. We're going to go up here 1125, 1135, and then we're going to top and reverse and head down. John says all clear. Amen, brother. I work it and keep working it and keep working it until you surrender. All right, Andres, let's switch gears here and go over to AvaTrade and look at the Russell 2000. This is what I'm talking about, similar to the S&P. We're just getting started on the S&P on the monthly, and we haven't broken a lower low yet. Everybody remember my S&P a moment ago, and I showed you the slingshot up and failing, trend momentum PAI clearly down, and we're close to breaking a new low, but not a new low. Well, the Russell smoked past a new low, is making a run at the cloud. Same rules. Nothing about this is bullish, even with this little retracement. Good. We need retracements in order to do what? To slingshot lower in the coming days. So my monthly says we're going further down. I expect to see it touch the cloud, even slice through the cloud. And my weekly says, yes, I'm moving into oversold territory, but what hasn't changed? Your homework was to watch this last week as this failed and moved lower, yes. And your homework over the weekend joining this week was to see what does the weekly do? It's still down. So Al, I got a monthly trend momentum PAI down. I got a weekly trend momentum PAI down. So I am just anxious to sell that rally because I expect much further downside. My daily has moved, obviously with the monthly moving down, a weekly moving down. The daily should be exhibiting very specific behavior. Slingshotting lower and lower and lower and lower and lower and lower. So yes, this is part of a little correction. Andres, I would not be surprised to see maybe this daily engage, disengage, and give us a little bit more and a little bit more depressurization. I really want to see the daily start to cross up and get a little depressurization out of it. I'd love to see a larger slingshot because we're due, as we haven't had much retracement and then a big push, little retracements, and lower lows, lower lows, lower lows. Well, it's due because my weekly's moving into oversold territory. Monthly still got a long way to go. Weekly is oversold but still down. So that's telling us the daily is due for further downside. Well, there are times when my daily could engage, disengage, re-engage, but longer term, we're breaking 1,000 and we're going to head and break the swing point low over here, and we're going to head below 978 and continue downward because the monthly and weekly are screaming at us. Very, very bearish. So yes, look for further downside on the Russell. My weekly says it as both the trend momentum and PAI are down. My monthly says it as both the weekly and the monthly trend momentums and PAI are down. That is bearish. So be careful on any type of bouncing trade and look to sell that rally as we move lower. Well, now all I need in order for the cycle, my 4 hours engaging down while my daily's trying to depressurize. Andres, could we see it where it engages, disengages, and I'd love nothing more to see this fail and grind a little further, meaning this turns and goes back up here. PAI's trend momentums go into overbought territory, which in turn gives my daily more time to depressurize, move higher, right? Build a more beautiful slingshot. But the long-term bias is if we don't go breaking new lows yet, then we might rally back towards the top of this, or the bottom of this goal line here. If I see that 4-hour slingshot fail, then I'm going to see it disengage and go up, daily continue higher. Then I'm going to look for price to rally up here towards this goal line. Everybody clear? I'm going to look for it to rally right towards the goal line. I got my red cursor right on top. 1035 area. Well, Gary, let's let the 4-hour fail. If this doesn't smoke and start pushing lower, the 4-hour turns and hooks out, then we're likely to be a part of an A, a B, and a C higher. And the higher should not only be a high above this high, but make a run towards the goal line. All right? Andres, you with me? So Gary, say that again. We need the 4-hour to fail. When's it going to fail? When it turns and hooks out. And if I end up with a low, a high, and a higher low, and guess what we're coming back to? This is a former battle zone over here. Go across the chart. Support, 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 support. Broke below, tested above, came back, hit support again, and we're right at that level now. Well, Gary, should we go a little bit lower? Yeah, we can. Just not below this low. So I got a low, I got a high, I got a higher low. When this turns and hooks out, it means we should see price wherever it is rally back towards the purple and gold line on the 4-hour, likely to make a run toward the bottom of the cloud, which represents my 1035 area, right? 4-hour fail, turn and hook out, grind up to this area, grind up and through toward the bottom of the cloud, at which point the 4-hour gets in overbought territory, turns over. So I want to look for this. Turn out, move into overbought territory. PAI, as it's turning and going back up, trend momentum continues its journey up. Price reverses and goes up toward that 1035 area, bottom of the cloud on the 4-hour, goal line on the daily, and then we look to sell that daily slingshot. So your trade alert is to sell the daily slingshot in the coming days. I think this daily right now is trying to mimic a slingshot down, but it's just turning hiatus. It's not officially hooked. It's flat because the 4-hour is engaging down. So I suspect we're going to see this. Paint that picture, my friends. I suspect we're going to see it fail, end up with a low, a high, and a higher low. And if so, this is going to turn and hook out. It's going to rally up to this area, then engage lower in the coming days. So first things first, I can't go long right this second, Andres, because my 4-hour is still down. And when is it likely to turn and hook out? When the 1-hour bottoms and reverses. We're not there yet. Okay? So should we see a little more downside? Yes. We're coming to a major battle zone over here. We've bounced, we've tested, held as resistance on the way down, bounced, tested on the way up, tested. So this is a support zone as we speak, but I would not be surprised to see it just tap, 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 maybe go a little bit lower. But once that workforce, bottoms and reverses, 1530 1-hour bottoms and reverses, I'm going to expect the 4-hour to release, turn and hook up. At that point, I have a bicycle 1530 1-hour going up. I have a 4-hour that was engaging, turning and hooking out. That is a scalp to the upside to make a run at the previous high and likely to make a run towards that 1030, 1035 area, which on the 4-hour time frame represents what? My Ichimoku, bottom of the cloud. And on the daily, it represents the goal line. Everybody good? So I'm going to look for this to depressurize further, take a little hiatus while the 4-hour does its thing. The 4-hour turns back up, workforce up. I expect to see this even turn up a little bit. and form a slingshot in the coming days. And as it finally slingshots down from there, then I'm going to expect downtrend continuation, because my monthly and weekly are screaming at us that this is not the bottom reversal. This is temporarily a correction, but it's not a bottom reversal. We got a long way to go to the downside. And Lord help us if it ends up being, Elizabeth, I'm coming to join you, honey, with the market crash. We're going to go slicing through the cloud, and we're making a run at these lows over here and below. All right. Any other questions before we call it a day? Any other questions? Remember, join us tomorrow as we're going to talk about how I can use the Ichimoku cloud on intraday scalping trades. When we get the direction correct, it's like, well, price seems to keep dropping, but as soon as I would get short, it would go up and stop me out. Then I would be upset, and then it would continue down. I have a bad timing for entries. Well, that's part of waiting for the sell cycles to finish, go into a buy cycle to go and then depressurize. And once that buy cycle flips back to a sell cycle, we go. Well, on the lower time frame Ichimoku, you're going to see it cross above the cloud, then back below the cloud. And as I see that on that 5 or 15 minute, my 1 hour's down, my 4 hours down, same rules we always talk about. I'm trading with the foreman and the workforce, but now I can use above the cloud to breaking below the cloud. And if my foreman and workforce is down when it breaks below the cloud on that 5 minute or my 15 minute, then I'm all about taking the sell there and putting my stop loss at the top of the cloud. Andres, you want to look at a little Facebook real quick? All right, let's see. Is it in this one? All right. Okay. Well, let me close this off. Where did my cursor go? I lost it. All right. So, monthly. We start to pick up on a monthly. We're in overbought territory. Starting the early signs of turning over. Weekly. Topping and rolling, pushing lower. So, therefore, Facebook is getting a correction. We broke through the goal line, so where should we run after we break the goal line? We should run toward the purple line. So far, so good. We got a little bit of a bounce. Weekly still extremely bearish, so I suspect Facebook is still going to go lower. My daily's in the process of depressurizing, looking for a little slingshot lower. So where should we rally to? We're testing the goal line up here, also the bottom of the cloud, right around that 98 range. I suspect we're going to go lower. We just simply need this cycle to finish. So we're going to, part of this 4 hour depressurizing, engage, disengage, engage, disengage. It's working on a correction higher. A lot of this overlapping, chopping up and down price action as of late, chopping, overlapping, is corrective. Corrective against what? My weekly and monthly down. So my daily's depressurizing against a weekly and monthly down. Your strategy is to sell Facebook based on a slingshot lower. When is that daily likely to turn over? We need the 4 hour to cycle into overbought territory, and we're in the process of grinding, engaging, disengaging, engaging, disengaging, grinding its way higher. So I don't think we're quite finished with the grind yet. Let me bring my cursor back into play. That's one way to find him, make him come back. All right. So Andres, you got that? Yeah, we're getting a little bit of downside pressure at the moment because the workforce is moving a little bit down, trying to top and roll. I suspect this little down move is going to be short-lived, and we're not going to go smoking to new lows just yet. We're likely to get a little more grinding, but clearly, as the S&P and the Russell finally break down after their correction, I'm going to look to sell the daily slingshot on Facebook. And first target will be my swing point low of 92.40. 92.40 is my first target. Then once I break 92.40, we're going to go to the left of the chart, which is, this is roughly the same area. We're going to come down here to this swing point low, which is roughly the 85 range.
Well, Andres says, how reliable the D1 engagement up?
This engaging, disengaging right now, how reliable is that? Well, we're getting a little downside pressure because the workforce is depressurizing. If we don't see the Dow and the S&P start to crumble today and it continues to grind a little higher, I'm going to look for Facebook to grind a little higher. And as long as this daily stays up, I'm looking for this little down move to be short-lived and a little further up. But I want to sell the daily slingshot in the coming days. So right now we have a PAI up, a trend momentum 2 down, trend momentum 1 is flat. So the bias is this little down move is going to be short-lived. We're going to get a little further upside, up and until the daily can flip and turn over. So I need to see some alignment. Right now my lower time frames really aren't aligned. My workforce and foreman are trying to depressurize. And yes, they're turning over in the lower scale, but the 4 hour should fail. It's done at once. I got a high, a low, higher low, and I should work on a higher high in the coming hours. So if I had to guess what we're going to see a lot more chopping up and down. We're ultimately going to see the 4 hour rally into overbought, rally into overbought. We're going to see the daily continue, let me move that out of the way, daily continue with a little more depressurization, which also bodes well for this little short down move to be short-lived to grind back up higher. At which point, I'm going to look to sell this daily slingshot in the next coming days. Could happen later today, but when do I think it's going to engage and go down? When the S&P and all starts its descent. So if we get a couple more days of upside pressure on the S&P for that correction, and then the slingshot lower, I'm going to look for similar behavior on the Facebook. All right? Any questions? So Gary, how high can we go? It's going to struggle when it gets to the bottom of the cloud, right around that 98 range. Came close, pulled back. Well, it should make a run toward there. And if it does break the goal line, it might run to the purple. I'm not expecting Facebook to slice through the cloud and go on to make any new highs over here. No, I'm expecting this to be short-lived reversal to the downside. And why is that so obvious and evident? Because as long as my weekly trend momentum and PAI are down, smoking to the downside, my monthly PAI and trend momentum down, that bodes exceptionally well for not only a retest of the low here, but a break and a run toward the purple line. So long term to the short side, 78 should come into play, almost a $20 move. Once we finally break the goal line sitting here at 91, we then should look for 78 to come into play. All right? Ichimoku monthly, when we break the goal line, we should expect the purple line to come into play around 78. First things first, we know it's not going to go from 91 to 78 in a day. It's going to stair step its way down. But as long as my monthly trend momentum and PAI are down, my weekly trend momentum and PAI are down, guess where we're going? We're going down. No ifs, no buts, no ands. But first things first, before we start going down, we need to finish this little depressurization, and then down we go. So my motto would be, as I always state, trend momentum and PAI down on a monthly, trend momentum PAI down on a weekly. I'm going to sell the daily slingshot. All right, even this little insipid one here, even that little insipid one there, still made a lower low, right? Went from here, depressurized into the goal line, slingshot lower to a lower low. Now we're depressurizing, turning and hooking out again. So as I stated, I don't expect this to go this way yet, Andres. I expect it to grind up toward 98, maybe a little bit higher, maybe toward 100 if possible, and we rally into the cloud area, at which point my daily engages back over. Daily engages. I'm going to sell with the expectations of a lower low. So we're going to target the previous low here first. Then we're going to go on to target the previous low over here and work our way eventually down to that 78. Stair step, stair step, stair step. All right, does that answer all your questions? So this tells me we're going higher. We just need this 4 hour to finish. So similar to the others, as we talked about with gold, 4 hours already turning and hooking out, looking for this to go higher. That bodes well with the daily still pushing up, that we're going to go up first to give the daily more time, and this 4 hours is going to go from where it is, start to grind its way up here, PAI start to grind its way up into overbought territory, and between the PAI and the trend momentum going into overbought on the 4 hour, it's going to give that daily more time to depressurize and to continue to form that slingshot. So in the coming days, I'm looking to sell it. And in the interim, where should price run? It should run toward the bottom of the cloud on the daily and maybe as high as our purple line. I would not expect it to go slicing through the cloud and trying to make any new highs. No. Monthly down, trend momentum PAI, weekly trend momentum PAI, say no to that right now. Okay? All right, so good day, good luck, God bless you. May the pips be with you. I'm humbled and honored to be your mentor and instructor. I hope that I no longer have interactions with my screen because of this cursor, because I like using it. It's big, it's bold, and it makes its point. And I have little X's and other cool things to play with. So please join us again tomorrow. Please join us again tomorrow as we cover how I'm going to use the Ichimoku on a 5 and a 15 for intraday scalping. When we get into those days, you know how you have strong down days or strong up days? And you know you want to get in a piece, but you're afraid to, and you're waiting for timing. Well, that's part of the cycling. We buy slingshots when we're up. So my 4 hour slingshot, my daily slingshot, etc. But while we're waiting for 12 to 24 hours intraday, and I'm waiting perhaps a day or two or three or four for a daily slingshot, what can I do? I can go, as long as my foreman and workforce are saying up, I can use the pullback below the cloud on the low time frame to break back above the cloud on the low time frame to then give me my entry intraday.
Oh, do you have a platform that Walmart's in? I was curious what their stock did after they announced they're closing all those stores. It took a big hit. Yeah.
I know we have it, but I don't know which platform it's in.
Andres, because he asked us to look at it.
Andres, is Walmart in here too? I'm just going through it. I don't see it. I know it's in the other platform. I'll look at it tomorrow. Trish wants me to review Walmart because they're closing all those stores with their price doing. Walmart's going to be pulling back, as they have been pulling back, because the Dow and the S&P are going to be pulling back. So Walmart's going to be pulling back. Do I see it anywhere? Sometimes they put them up here. Google, Walmart. All right, let's look at Walmart real quick. Asking, you shall receive, and if you didn't ask, you shall receive anyway. Give it a minute to update to Walmart. I don't know if y'all heard, they're closing, what, 269 express stores.
A few super centers.
A few super centers. And a few Sam's. Walmart, as you would expect, as I mentioned, has been pulling back. Let me update. It's been definitely pulling back. At its high, it was sitting up here at $90. Now we're down to 62. Bottomed around this 55 range, 58, 56 range. So yeah, Trish, we still got further downside on Walmart because my weekly is depressurizing, so we're getting a little bit of a depressurization. Well, maybe not. Monthly starting to turn up, but I still say, even with this, here you go, Andres, perfect thing with Walmart. Yeah, we're rallying. Where did it find some resistance as it touched the bottom of the cloud? It should hold its resistance. Well, could it go up high? Yeah, it could run to this line, it could run to the top. But I suspect in the coming months, what's going to happen? I don't think Walmart's going to go soaring and making new highs just yet, because the S&P, the Dow, and all are expected to go lower first. So I would expect Walmart to depressurize and give us a monthly slingshot in the coming months. So let me put that back on over here. So long-term Walmart. Yeah, we're getting a little bit of a retracement, but this is based on this previous down move. So we should get a correction, then a move lower. So what do we do when we look at corrections? We go to Fibonacci, for those of you interested in Walmart. And we go from the swing point high to the swing point low. And I would expect to look, we're already at 23. I would expect Walmart probably will grind a little higher as my monthly and weekly are still depressurizing. So I'm going to look for, wow. Everybody remember how to put my little triangle in here? You go to the squiggly line, your right key click, go to customize. And then you scroll through this list to find your rectangle. You highlight it, you insert it. And then when you insert it, you want to go next to the Fibonacci, so I can leave it highlighted, go up, up. Now close. Now it's right next to my Fibonacci. So I want my color chart to show that there's a good chance Walmart will probably rally to this area before it cycles back down. And I'm going to go in here and change that from blue to pink for resistance. So based on my monthly starting to depressurize, could we see Walmart give us a little bit of a retracement? Yes. But again, it should just simply be a Fibonacci style retracement before another push lower. Long term, the S&P, the Dow are expected to go much lower. Even with the bullish of the bearish scenarios, right, William Bruce? Even my bullish outlook of the bearish scenario is that we're still going to go lower. And as we go lower, Walmart's going to go lower. So as we get this correction, yeah, we could go a few more dollars to the upside. Somewhere around this range of, let me get a number since I don't have it built into my Fibonacci yet. I had to download this new platform. I have a high about $70. So could we rally 5, 6, 7, 8 more dollars maybe to this range? More likely going to reach a 50%, 38.2, which is sitting about $71. Yeah, about $70 range, maybe a little bit higher. But what am I looking for? I'm looking for the monthly to turn over. In the interim, what can we see? As my weekly starts to depressurize, this is going to fail, right? My red's hooking, blue saying no, money flow saying no. So we're going to expect Walmart to bounce. It's pushing off the goal line. We expect it to run back toward the purple, make a run up probably towards the cloud, then weekly top and roll, weekly top and roll, weekly trend momentum PAI top and roll out, and we get a monthly slingshot down. So let me paint the Walmart Picasso. We're going to see this go higher, and we're going to see price bounce and go up probably toward the 50% retracement, probably another $8, $9 range, around 170, 71, basically run into the cloud, at which point my weekly will be turning over, PAI turning over on a weekly, and when the weekly does turn over with the PAI and trend momentum, I'm going to expect this monthly will engage down. Okay? Any questions? Line of progression, cycle up and down. James, we look for signs and symptoms of cycling time frames. Cycling time frames equals trading opportunities. Cycling time frame signs and symptoms gives us our high probability trades. And with a weekly and a monthly up, that tells me Walmart's spike here isn't over yet. It's stair-stepping its way toward this target zone, and then it's going to flip over. And it's going to slingshot lower on the monthly. In the interim, the weekly is going to show what? This is going to turn and go back up as it's doing now. It's telling me red's hooking, but blue and green say no, so it means it's going to bounce and run towards 70, probably this 50% retracement range, to then reverse with the weekly. So when is the correction over? When the weekly tops and rolls. Everybody good? When's the correction over? When the weekly tops and rolls. And when the weekly tops and rolls, what's the monthly going to do? It's going to slingshot lower. Okay? So I don't expect this bottom after about a $20 drop from 90 down to almost $30 drop, 62, so it's that $28 drop. It's not over. It has further to go, and it's going to rally, then drop further in the coming weeks. And how are we going to get there? Via monthly slingshot. How is it going to force it to do that? When my weekly tops and rolls. Up and until then, my weekly trying to engage with money flow still up like that, tells me we're bouncing and going up. All right, so good day, good luck, God bless you. Again, join us again tomorrow. We'll talk about above the cloud, breaking below the cloud. That's the highest probability trades on Ichimoku when the white line crosses below and price action closes below. That sets the tone. And notice when Walmart was up here at 90, it crossed finally on the weekly, giving us that sign. But as I go to the daily, that cross occurred sooner, as I got to turn the auto scroll off and scroll back in time to show you that when the daily crossed over, it was much sooner than when the weekly crossed. And my white line finally crossed below, we closed below, and we started to stair step down for weeks and weeks and weeks to come. So as long as my daily's below the cloud, we can use my 4-hour as it ultimately, back this direction, it too broke below the cloud, but remember, it would break above the cloud, then below, and start the next big trend again. And are we going to get another break above the cloud on the 4-hour? The answer is probably yes, as we came close here and broke back down, but I suspect during this latest retracement, let me get back to the hard right edge, but notice how the 4-hour breaks above and then back below, above and back below, above and back below. So it's similar with my signs and symptoms. Greg Toussaint, that make perfect sense? That as my time frame cycle, my monthly and weekly are down, we're going to get 4 hours to cycle it over above, and even on Ichimoku it breaks to above the cloud and then reverses, and above the cloud and then reverses as these time frames continue to cycle. So back to the hard right edge, and I'm going to turn my auto scroll back on. My 4 hours above the cloud, so guess what's coming? When we finally come from above the cloud to below the cloud on the 4-hour, that is a good sell. And it's going to be when my daily does what? My daily tops and rolls and starts heading down. And my 4-hour starts breaking. I got a daily down, a 4-hour depressurization, so we're likely to go up first, then top and roll down. But we got a daily and a weekly and a monthly. That's telling me we'll be able to use intraday going to the smaller time frame. So during this correction, we're starting to get a break above the cloud. My 15 is an overbought territory as I'm starting to break the cloud. That's okay. Is my 30 still up? Right now it's trying to do something, but yes, it's still up. My 1 hour is still up. My 4 hour is still up. My daily is trying to engage up. So that's why we expect what it to do? It's going to break and go higher. So look for Walmart to reverse and go higher. Hint, hint, hint. Start to grind its way higher as we look for this continuation trade. And my weekly continues and tells the daily that, yeah, you're going to be slingshotting higher because I'm not turning over. Green says no, blue says no, red hooked, bounce, go up. Okay? All right. Join us tomorrow. We'll see you then. Take care.